and volume of sales, right? We have a fixed cost, 80,000. Now, if we want to sell more to 40 units more, from 500 to 540, our budget would be 10,000 more. So now what happened to the profit? So 250, this is the previous analysis. Now what happened? We are selling 540. 540 multiplied by 500, answer is 270,000. 540 multiplied by 300, answer is 162,000. Now we have contribution margin, which is 108,000. Remember, our advertising budget is monthly. It means it's fixed. Monthly, it's not changes. It is fixed. So we add it into our fixed expenses. Our fixed expenses shoots up to 9,000. So look at that. Our profit, rather increasing, it decreases. So that layman concept, if we sell more from 500 to 540, our profit will be higher. No. Because major contributor here is your fixed expense here, because you also increase fixed expenses. So it means sale increased by $20,000, but your profit decreased by 2,000. And what is the biggest contributor here? Is the increase in fixed cost, right? You can also say that how much is the increase in contribution margin from 500 to 540? How much increase in units? 40. 40 multiplied by per unit contribution margin. So answer is 8,000. So your contribution margin to the, your margin to the, your profit to the net operating income is increased by 8,000, while your fixed cost increased 10,000. So that's why you're having a 2,000 loss in our profit. Previously we are earning 20,000 and now we are earning 1,800. Our profit is decreased by 2,000. Now you get it, Subhan and Junpyo? It means
Yes, sir.
that concept that if we sell more, we will be having a more profit, no longer true, right? So we need to control our fixed cost, because fixed cost is the biggest contributor to decrease in profit. Let's see that. The next strategy. What is the profit impact if RBC can use higher quality raw material, thus increasing its variable cost by 10 per unit? Previously the variable cost was 300, but now it would be 310. Remember that one. And their sale increases to from 500 to 580. Now let's make the contribution margin income statement. So that is the previous scenario here. So 580 multiplied by 500, answer would be 290,000. 310 multiplied by 580, answer would be 179,800. Our contribution margin is 110,200. 80,000 is our fixed cost, because fixed cost is not increased, fixed cost remain the same. Look at that. Even though you see variable cost is increased by 29,800. You see the difference between variable cost? 29,800 difference. In our previous question, we just increased fixed cost 10,000. Here we are increasing our variable cost 29,800, approximately 30,000 increase in variable cost. Even then our profit shoots up, right? More than 50% our profit increase. So this is the magic, right? Even though your cost is increasing, even then your profit is increasing. That's amazing, right? Isn't it? So it's very important for your business. So that's why you must understand the psyche of the business. So don't focus on sales push strategy. You pushing your workers to sell more, to sell more, to sell more. No, control your fixed cost and then sell more. Don't worry about your variable cost. If you're selling more, your variable cost is increasing. Don't worry about that. Your profit will be increasing more than 50%. Don't worry about that. Just control your fixed cost. Right? Now, let's change 2 or 3 things together. So what is the strategy if RBC cuts the selling price to $20? It means 480 would be our selling price. What is the law of demand? Price goes down, quantity go up, right? But they increase their advertising budget to 15,000 a month, right? And their sales jumps to 500 to 650. Now, let's see, by decreasing the sale price, but increasing our fixed cost, what happened here? So you see, it's our old scenario. So we decrease our sale price to $20. It means 480 is our fixed, our sale price. 480 multiplied by 650 is 312,000. 300 is our variable expense. 300 multiplied by 650, answer is 195. Our contribution margin is 1170. Since we increase our monthly budget, so 80,000 plus 15,000, answer would be 95,000. So look at that. Your profit just increased 2,000. You decrease your sale price and you increase your fixed cost. Double strategy. And your profit just increased by a small amount, small percentage, just 10%. You getting my point? So biggest contributor to the decrease in or increase or biggest hurdle in your increase in profit is fixed cost. Even though your sale increased by 62,000, your profit is just increased by 2,000. Look at our previous strategy. Even though our sale is increased by 40,000, but our profit jumps increased by 10,200. Right? So if you want to start your own business, take sorry, take very good care of your fixed cost. See that? Now we have a loss strategy here. And after that, we will see some questions here. So what is the profit impact if RBC pays 15 sales commission per bike? It means the more you sell, the more commission would be. So its nature would be variable cost, right? So rather, instead of paying the 6,000 flat salaries that currently total 6,000 per month, it means they cut their fixed commission from 80,000. They cut their 6,000 and they pay commission on the basis of sales. So their sales jumps to 500 to 575. So let's see that now. Okay. Now their variable cost would be 3,300 plus 15. Answer would be 315. Let's see that. This is the old scenario. The new scenario would be, we have a sales 500 multiplied by 575, answer would be 287 500. So 575 multiplied by 315, answer would be 181 125, and your contribution margin would be 106 375. We decrease our commission, flat commission 6,000, so our fixed expense decreases to 74,000, and look at that, the magic here. Your sale increased by, your profit increased by 12,375, even more. Even though you are increasing your variable cost, you are just controlling the small part of your fixed cost, 6,000. And you are not selling the huge amount, just 75 units you are selling more, that's it.